Looking back at the PMI survey for 2014, the year can be best described as a game of two halves. The rate of growth in terms of business activity, new orders and employment during the first half of the year accelerated relative to the previous 6 months, which was the second half of 2013. Meanwhile, when we looked at the second half of 2014, those rates of growth in those various indicators eased back. In many ways, the slowdown in the rate of growth was expected and indeed inevitable, given the longer that the Northern Ireland's private sector recovery progressed. Northern Ireland's private sector slowdown was particularly marked in the fourth quarter of last year, with the rate of growth in business activity, new orders and employment the weakest quarter since the recovery began 6 quarters ago. Indeed, if we look at the latest survey for December, following 17 months of growth in terms of output and employment, the December survey reveals that the recovery effectively ground to a halt as far as business growth and job creation are concerned. Looking at the business activity index, it fell just below the threshold of 50, which denotes expansion and contraction, and therefore signalled a marginal contraction in business activity. Meanwhile, the employment index recorded a slightly higher reading than the no change figure, but overall both of these indices essentially report that growth in output and employment growth were effectively flat. Clearly, the Northern Ireland economy is not unique in experiencing an economic slowdown. If we look at the equivalent PMI survey for the UK, it recorded its weakest rate of growth in 19 months. Also, if we look at global output, it eased to its lowest level in 14 months in December. Clearly, Northern Ireland cannot insulate itself from external economic developments, and the manufacturing sector in particular in Northern Ireland has seen a marked slowdown in economic activity in recent months. Economic stagnation in the Eurozone and indeed the wider global economic slowdown have impacted on Northern Ireland's manufacturing sector, and indeed the December PMI survey saw local manufacturing firms report falling levels of output, new orders and employment for the first time since mid-2013. At a sector level, the local construction industry was the star performer, and indeed the construction sector was the only industry to report an acceleration in growth in business activity, new orders and employment. Meanwhile, it's encouraging to note that the local services sector, which is the largest industry in the local economy, reported growth in business activity, new orders and indeed employment for the 18th consecutive month. However, the pace of growth was lower than that recorded in November. What is perhaps concerning is that Northern Ireland's economic slowdown has been more marked than that of the UK as a whole. Indeed, looking at December's PMI, Northern Ireland, of all the 12 UK regions, recorded the weakest levels of employment growth and business activity. However, the latest survey may just be a blip rather than the start of a significant deterioration in business conditions. It should be remembered that when we look at Northern Ireland's two most important trading partners, the United Kingdom and the Republic of Ireland, these two economies are still posting robust rates of growth, and this should continue to drive the local economy for some time to come.